Greetings, folks. This is DC Investing. I've reached financial independence, and I'm talking about topics that may help others on their path towards financial independence. And the topic I want to discuss today is the oil or energy midstream segment, because I'm seeing sort of a divergence in some of the companies. I guess this could be a divergence in the force if you're a sci-fi person, but basically, the companies that are normal corporations out there have been doing really well, and the companies that are master limited partnerships have all been really soft lately. So some of those names that you might be interested in looking into. You have Enbridge, which is ENB, has been on a real good uptrend lately. Antero Midstream, which is AM, has done pretty well. Kinder Morgan still going up. That's KMI. Williams, WMB, that's still kind of on an uptrend. PBA just signed a deal with Meta to do some energy data center up in Canada someplace. They had a big jump on that news. DTM, I think that's DT Midstream. That one's done really well. TRP, I think that's TC Energy. They're still going up. Southbow, SOBO, still going up. Those have all done really well. The two that haven't done so well that are kind of normal corporation types are Hess Midstream, which is HESM. Chevron bought their parent company and then idled one of the oil rigs in their main oil field. So some of the growth on that company is in question, but they'll probably get bought by Chevron at some point. So that was kind of an interesting one. And the other one that's not doing well is One Oak, which is OKE. I don't know what's going on with that company. If any of you out there have any idea of why Oak has been so soft recently, let me know, because I'm curious. So overall, the normal corporations have been doing really well, whereas the midstreams, not the midstream, but the MLPs have been really soft. So those companies are Energy Transfer, that's ticker ET, EPD, Energy Production Partners, MPLX has even gotten a bit soft lately. Western Midstream, that's WES, Plains All American, which is PAA. Sunoco, which is SUN, that was looking really weak. USA Compressions Partners, USAC. I don't think if there's any more that I can think of off my head. That's kind of the list of the major master limited partnership companies, and they're all just kind of really weak lately. So if the normal corporations are doing just fine, that may mean that you have a buying opportunity in the midstream master limited partnerships that, hey, this is weak, now's a good buying time. And when the prices go down, the dividend yields in effect go up. So a lot of these companies are yielding 6.5%, 7.5%, 8.5% dividend yield. I think Western Midstream is actually 9.5%. Really good yields from this area. You do have to deal with K1s on your tax statements, but they're not that big of a deal. So does the weakness in the master limited partnership group signal that, does it signal that it's, hey, just a buying opportunity, or does it mean that we are actually headed towards a recession where less energy is going to be actually shipped around the country? I'm really not sure if that's what it means or not. So be curious if any of you out there have any insight into the energy midstream segment right now. If we're just in a weak spot, now's a really great time to purchase these. If you don't want to purchase the individual companies to deal with the K1s, there are some ETFs that you can get. MLPA is an ETF that deals with the tax issues, or AMLP deals with the tax issues. I've got a bumblebee flying in front of my camera right now. I don't know if you saw that or not. That's kind of interesting. There's even one MLPX, and that owns not only the master limited partnerships, but some of the regular pipelines as well. So those are some ideas if you don't want to deal with the tax things, but you do pay a little bit of a fee to own those. So I don't know. I'm just kind of questioning. I'm seeing weakness in the pipeline segment for the master limited partnerships, but seeing strength in the companies that are not master limited partnerships. It's really a weird divergence. So I am nibbling on some of the master limited partnerships. I'm buying some Energy Transfer, a little bit of MPLX. I think I bought some EPD, just a little bit. I'm buying more in my margin account for Plains All American and Western Midstream, because the dividends are so high there that I can borrow money at 5%, but the dividends pay 8.5% to 9.5%. So I'm just kind of doing a dividend arbitrage there. I've been buying more of those recently, but I don't know, they could continue to go down. Not really sure what may happen. So it could signify that this is a recession indicator. If the smarter fund holders out there are the ones that own these mass limited partnerships, they're kind of selling out, then that could be a signal to the economy. The AI thing is happening right now. There's lots of companies making deals with OpenAI to buy more NVIDIA chips or AMD chips. All of those need energy, and electricity has to come from someplace. You got to move. Right now, it's natural gas. So these companies move natural gas around the country. Um, you can't do AI without the pipeline segment. So if the AI story is real, the the pipelines have to go up. They just do. Um, but if the AI is just smoke and mirrors right now, and that we've got a big story right now, but it's not really going to come to fruition, maybe some folks are kind of sniffing that out right now and realizing that that segment of the market is just a pipe dream. And if it is, I mean, that's the only thing that's propping up the market right now is the AI story. So could this weakness in the pipeline industry be signaling, hey, there's going to be an end to the AI story, or is it just a soft part? I'm not really sure. Be curious to hear what your comments are. So like, subscribe, let me know your thoughts. We'll all kind of learn together. I appreciate you all for watching this video. Thanks. We'll see you. Bye.